to a huge moment for Bitcoin, breaking through $45,000, and now we're sitting at 47,200. What is next in store for Bitcoin? This is a hugely bullish moment with good volume, and this has big consequences for the crypto space over the next few weeks. We're going to delve into that. We're going to look at the key levels of resistance. We're going to look at the liquidations, what caused this pump, and we're going to see what is our price target here on Bitcoin. I've also got one caution area which I want to bring to you. Again, when everything is euphoric, I have one message to bring to you, which is really important. We had our course member live stream yesterday. Our first member live stream yesterday was an absolute bang. We were talking, and literally at that moment, the price broke through 45,000. And I gave a message of warning to my members to say this is something we have to watch out for. So make sure you stay tuned till the very end for that. As always, if you want to support NordVPN, links in description. You can get yourself 70% off of a VPN. Absolutely, links in description. Make sure you're staying safe in crypto. That the very minimum you could be doing for your privacy and security in terms of crypto is to have yourself set up on a VPN. Link below. It costs about $2 or $3 a month. Absolute no-brainer. Anyway, we're not here for that. What we're here for is this, a hugely, not historic, but a big moment of this year so far. And this is going to be a defining moment because we've been monitoring this for a while now, and we're heading into this wedge on the 4-hourly. Now, if we go over to the 4-hourly, you'll see very clearly that we were in this wedge pattern. The line was at 44.5. Now, what happened was in the interim, we broke above the white line, but we had a little bit of resistance at the psychological level, which is 45. And you can see here we got rejected once, twice, thrice, and then this was perfect. And literally, again, we were watching this in our course member live stream. We inflected to the downside, right? So it looked like you had a big rejection. And this is how the whales and the market manipulators play their games. I know because I was at an investment bank, and this is what was happening all the time. What happens here is you get a whole bunch of eager shorts saying, oh, look, the price is going down. The price is going down. Let's get our short positions on, right? Because it looks like the rejection is clear and we're going to head back into our wedge. But the trick is you liquidate those eager shorts, the ones who are leveraged, because shorts can be leveraged too, and then boom, big move to the upside, liquidating them. And if you want proof of that, let's head on over to the liquidations, and you can see just Bitcoin only liquidations yesterday amassed to 120 million. That's Bitcoin only. Normally when I'm presenting numbers, sometimes it's all coins mixed together in liquidations. Just Bitcoin only triggering 119 million of liquidation. So that was a whole bunch of eager shorts to the downside trying to push Bitcoin back down to 32, but they didn't succeed. The greed index is climbing. It's now sitting at 60. This is now officially in greed territory, exactly as I predicted in my video yesterday. This is exactly in greed territory, and it's played out exactly how we've been saying over the last few weeks. Now, if we zoom out again, we'll remember on the 4-hourly chart, we said we were in this wedge. And for those who are following my videos, you'll remember I said that from this period onwards, when we entered the wedge, we were going to have a whole bunch of false starts. We're going to have moves to the upside and then sudden pumps to the downside. Moves to the upside, sudden pumps to the downside, because there was uncertainty in the market. We still had fear. We still had a whole bunch of issues going on in terms of inflation. What was the Fed going to do? Were we going to get interest rate hike? What were they going to do in terms of their balance sheet shrinkage? But now from the 16th of March, we got the green light. The market felt confident that we know what's going on. We had our first interest rate hike. We're expecting another one. And in fact, I gave evidence in yesterday's video that we're even priced in a double rate hike for May. So the market is almost not bothered now about what Jerome Powell is saying or doing. So you can see here the difference. When we were moving initially, when we were having these fake pumps, which I was calling them, and I told you guys we were calling them false starts, you could see a big move to the upside, and then big moves to the downside, big moves to the upside, big moves. Look how steep. Look at the gradient of those moves. Now, the difference is from the 16th of March, look at the move there. This is far more gradual. This is far more of a move that's sustainable in the market, saying, hang on a second, we're having a change of direction. We can have a sustainable pump to the upside as opposed to these fake ones with no conviction. These are no conviction. These are just liquidations. Eager longs, eager shorts liquidating each other and moving very fast and quickly, in a volatile manner to the upside and downside. Since the FOMC meeting, this is very different. The gradient is very different, and that's what makes this pump more plausible to the upside. Now, what do we expect to see from here? Well, we know the wedge pattern has a technical target which we've been monitoring at 52,700. That's our first target. But ultimately, we can start completing this pattern. What we eventually want to do is get into this red box. And the red box is between 57,000 and 61. And we've not spoken about the red box for a while, but for those of you who know, if we just head over to the daily chart, this box is really, really important. And the reason it's really important If we date back all the way to last year when we were running to our highs, you will see that this box acted as resistance. We initially ran up to 64. Look how many times we got rejected in this box. Similarly, when we ran up to 69, we managed to break through the box this time, but then ultimately we broke down through it to the downside and headed to create some of the lows again. Okay, so really important that we can eventually get to 52,700 and then work our way towards this box between 57 and 61. This is going to be a really important level because we need to turn this into support. We failed 2 times already. We need to turn this into support. Now, what's my warning for all of you guys right now? My warning for you guys, if you've been watching my videos for a long time, is this is a good moment right now. Okay, we're in a good moment and we can enjoy this rally for the short term. And I'm expecting a few weeks of this at the very least, because right now we don't have any major catalysts in our way. Look at the news and open things up. Things are looking a little bit more positive. Markets, pre-market for today, opening flat. Okay, so no worries in the market. You've got oil slightly down today, which is good. And you've even got conversations of Russia and Ukraine prepare for in-person talks after Zelensky says he's ready to discuss neutral status. Things like this are really going to help the market settle down, lower their fear, the volatility should fall, and we should stocks and then crypto start to climb to the upside. So I'm expecting a few weeks of, green price action. Now, what we need to do, we need to be contrarians. We need to think that when the fear and the greed starts coming into the market, we need to be worried. We need to be planning our next move, because the reality is we should have been doing our buying. And if you're watching this video, hopefully you did, when nobody else wanted to, in the down periods, right? We wanted to do our buying when everybody else was fearful, when people were saying, oh, Bitcoin's going to go all the way down to 20. That's when we want to be pulling the trigger. Because we only fell to 32, 33. We didn't go to 20. All of that was fear, and that's when we should be doing our work. Equally, on the other side, now you're going to get your taxi driver talking about Bitcoin again, right? Your office colleague's going to be the know-it-all about Bitcoin. Everybody's going to, your Uber Eats driver is going to be saying, have you got any Bitcoin? So when that euphoria starts to kick in, now we need to question ourselves, because we don't want to get ourselves in a situation where we're starting to buy the tops. We're starting to increase our average cost basis and starting to buy ourselves in the froth. It's fine if you have high conviction and you're buying on pullbacks, but let those pullbacks come to you. Okay, so looking at this on a short-term basis, for example, on the hourly chart, we're creating a bit of a bull flag, which is nice, right? It's a continuation pattern. Okay, now what happens is after a big move like this, think of an athlete sprinting, they just need to take a breather for a bit, right? Before they go on their next sprint to the upside. Now, the other thing is, don't be shocked if we get a retest of either 45 or 44.5 before then heading higher. And the conviction point would be this point. When you break this point again on your way back up after the retest, that should give you a lot of conviction to the upside. That is far more powerful of a sign when this happens than just running up. Okay? Because if we just did that, that's fine. But remember, just as quickly as you go up, you can come down. So whenever you're going up, if you get these retests, this is almost what I call scaffolding. I call this scaffolding because it's like climbing yourself up a skyscraper, build scaffolding on your, right? So if you fall, you only need to fall to the nearest checkpoint. That's what we want to see here on Bitcoin, is nice, sustainable, patient moves. This was nice how it consolidated here, because it meant we didn't give up all of this, right? It said we lock in this in, we move, we lock in the level, we move. That's what we want to see here on Bitcoin. So my message for all of you guys is be patient. Don't rush into any crazy buys right now. Let the green candles do their work. Let the people come in. Let the fear come in. Now we will see some sort of a pullback. And then in those moments, if you need to buy some more, get yourself some more in those moments. Okay. Now, macro-wise, what are we expecting? Well, we want to see that we start creating higher highs. So if I head over to the weekly, this is a really important update that we need to follow. So if I just get ourselves onto a cleaner chart, you will see that on the weekly chart in yesterday's video, we said we wanted to get the close above our weekly candle. And boy, did we do that. In the final hours of that weekly candle, you saw the push, and this is not a coincidence, right? It happened in that moment. The bulls came in with high volume, closed well above the weekly candle, and now we're getting the flipping. If we could have another strong green candle here and taking us to, the price target of 52, that would be a green candle up here. That would be really powerful and set us up for a big move to the upside. And if we zoom out on the week, we know we're forming this really big W pattern. Okay, this is a nice W pattern with probably a neckline at about 64,000 at the highs. But also in the smaller interim, you're creating a W pattern here as well. Okay, so a lot of positive bullish confluence going on right now, a lot of patterns within patterns. From a technical perspective, when you merge that with the fundamentals, that the market's looking pretty clean, there's less uncertainty going on, things are looking pretty good here on crypto. Now, the important thing is we created a low here, right, at 29. We created a higher low by being at 32. created a high here, 64. We created a higher high here at 69 when we run up. So now when we run up, we just want to get past 69. Even if we go touch 70, 71 before pulling back even down to 40, guys. Yep, I know it sounds crazy, pulling back down to 40. That's the long-term sustainable way of doing it. And that wouldn't even be an issue, right? As long as we run up, create a higher high and a higher low on the way down, it sounds crazy. But if that's what we wanted to do over the next few months, feel good for Bitcoin. Now, obviously, everybody's going to come in now and you're going to see all the YouTubers saying they're doing 100x leverage trades. Bitcoin's going to 100,000. Yeah, take that all with a pinch of salt. Let's just take each thing as it comes. Let's monitor the charts. Let's monitor the fundamentals and make sure our portfolio is allocated in the right way. Overall, really nice couple of days here on Bitcoin and a good couple of weeks, really. We're getting some good momentum now. We're getting some green candles. The FUD is starting to drain out. The euphoria is starting to come in. You can feel the positivity. Maybe more people are going to start watching crypto videos and suddenly saying, oh, Bitcoin's going to be 1,000. It's our job to filter out that noise. And if you appreciate my perspective and you want to hear more about it, consider hitting the pinned comment below. You'll find the link to our Discord. In the Discord, you'll find out how to become a member on our live streams where you get access to ask me questions, take your portfolio. We can have discussions about my strategy, my psychology, what I'm doing in the market, and a whole bunch more. So consider signing up to our members only live streams. As always, guys, thanks for watching. We'll see you.